Hi, everyone. My name is Don Davis. I'm the Senior Vice President of MBO Experience here at NYCHEX and former executive of Hapag Lloyd and CMA CGM. And this is another exciting episode of Supply Chain Secrets. My normal co host, Caroline Weaver, is on vacation this week, but we are joined by our special guest, Mr. Bryan Most. You might remember Bryan from our last episode. Bryan, how's it going?
Hey, it's going great, Don. Going great. Happy to be here again. And I think the last time we talked about 100-degree temperatures, but I think fall is starting to make its way to Arkansas at least. We're in the upper 70s and mid 80s, kind of, feeling really good. No leaves changing yet, but starting to cool off.
Yeah, it's not bad here either. It's in the 70s. It's perfect fall weather. I am starting to get a lot of leaves, which is making me nervous because I have a lot of trees here in New Jersey, and it's the worst, absolute worst. There's leaves everywhere, so it makes me a little crazy. But feels like old times. We started the show together, and it's fun to sit here and talk to you. And I think for this episode, we just want to start off just talking about the market in general and what's going on. And I'm curious, how you see things based on what you've been doing and the people you've been talking to. Like when you think about the current market condition, what's top of mind for you?
Yeah, I mean, I'm not sure there's many surprises. I think the bigger questions will come in the future. Where is this all leading? But right now it just feels like things have slowed and stagnated to a certain degree, right? We've talked about retailers being very cautious the majority of this year, and there's a lot of good reasons why. Obviously, there's still inventory overhang that they're dealing with. There's still concerns about consumers and what the holiday season will yield. The great thing about holidays is people are going to celebrate them, right? Whether there's inflation or not. The question is to what degree will they celebrate? So I think that's the idea of being really cautious about inventory, which puts consumers back in this position of like, hey, if there's something out there that you want that's specific, like you better buy it because once the inventory's gone, it's probably gone. But I think retailers are okay with that scenario versus having again, inventory that they're going to have to deal with for some time in the future. Now the good news is being out in the stores, this is kind of mid-September, and you'd expect to see seasonal goods, but it's kind of good to see holiday items, a lot of kind of fall harvest and Halloween, and even some early Christmas stuff. It sounds crazy, but anyway, there's some early Christmas stuff out there, and we'll have to see. But this idea of consumers moving from discretionary goods to essential goods is without a doubt, kind of settled in for a period of time, and we'll have to see how that goes for the balance of the holiday season.
Yeah, I was in a Costco the other day and I saw a lot of Christmas stuff, and I was like, let me check my calendar for a second here. What month am I in? Because I'm not quite used to seeing so much before Halloween. But I'm wondering, do you see that shippers have changed their ordering patterns? I mean, I think there was like always a ton of items when you went to the store, so you never felt like they were going to run out. And then there was a period where like there might have been like six of these giant Home Depot skeletons, and once they were gone, they were gone. And I know you said that there's like excess of inventory and there's less demand, but do you think that shippers have changed their ordering patterns now? Here we are in a post COVID environment.
Yeah, I mean, I think it's really difficult for retailers these days, right? I mean, it's hard to predict and hard to figure out how much needs to be bought, but because of the lead time in some of these orders, because they're so massive, I mean, in a lot of cases, orders are even being placed, a year in advance for core items for holiday seasons, just because of the sheer size, the raw materials that need to be procured, the factory space, all of those things that go into making these massive orders for holiday seasons. But there are certainly things that I think retailers are trying to hold off as long as they possibly can to just try and get a gauge for what this is actually going to look like. The problem is, and we'll probably talk about this a little later, is even though retailers would like to wait to the last possible minute because there's variability back in the supply chain for a number of reasons, I think retailers feel caught where they're actually having to add again days of inventory back in to what they're doing to accommodate for the variability. But it's a really difficult situation for retailers to be in, and depending upon again who you are, your ordering patterns could be different. But still, I think the general approach is cautious more than anything. And I think you see that when you kind of start to look at some of the import numbers. One of the main reports I look at is from the National Retail Federation. Their global port tracker is pretty good. I mean, again, it rolls up total volume, so you don't necessarily have, unless you look deep into the numbers to see what ports it's coming from and coasts and things of that nature. But July was the latest data that was available, and even though July was up about 4% from the previous month of June, it was still down over 12% from last year, right? And then even when they talk to retailers about what might be coming up, it really it doesn't show much more. So like for the peak season, which we would consider maybe August, September, October, I think is around 2 million containers per month, which again sounds like a lot, but it's still down 10 to 11% from previous years. So I think that's where you're starting to see this cautious approach to inventory, is it's just bearing out in the numbers.
Yeah, and I think for ocean carriers, it's tough because that year-on-year comparison. I mean, when you compare anything to the last 2 years, it's dwarfed because every ship that could sail was on the water because there was such a need for capacity. And today, obviously, that's changed, and you see carriers responding by having this aggressive control over capacity and doing a lot of blanks, which I think has a lot of downstream effects for shippers. And I know people that I talk to that are on the shipping side, they want the carrier perspective and they're like, what's going to happen with the rates? Because there's a lot of fear that rates could shoot up again. And I think that, this peak, I mean, I don't know if I really even want to call it a peak because it didn't really feel like that. I think capacity was generally pretty well available. It was just the blanking that was just throwing a monkey wrench in shippers' plans because they couldn't rely on a necessarily weekly service because carriers are going to control capacity because they want to keep the rates high, they want to be profitable, and it's in their best interest to keep supply tight because that seems to be the best way to control price. And I know shippers don't want to hear that, but I mean, I think if anybody had an asset that if they use it and they're going to lose money, they might just say like, I'm going to slow down the usage because I want to make a return. I'm a for-profit company. And I think for carriers, the big dilemma is you're going to be compared to these results from last year or the last couple of years, which were just unbelievable. It's hard to look at those and say, I'm going to have those kind of results going forward, given everything that's happening. But the other side, and this is something I don't think gets talked about enough, is that costs have gone up. I mean, carriers are not dealing with the same cost base that they were in 2019. And for them, it's like, yeah, I know the rate might have been, I don't know, 1,500 in 2019, but that same $1,500 rate looks completely different today because my costs are a lot higher, and nobody's talking about that. Everyone's talking about that I made a bunch of money, but that bunch of money is not going to last me as we go forward. So I have to find ways to improve the revenue because, again, going back to those rates of 2018 and 2019 are going to cause a lot of problems for me as a carrier.
Well, I think the idea of costs going up is universal, right? I mean, the one thing that could help all of this would be again a resilient consumer who gets back to buying habits, right? That again move back into some of that discretionary mode, and it's tough right now, right? Because obviously we've talked about inflation before on this show. Inflation is still right. Interest rates are still at a 22-year high. So that's probably not changing anytime soon. Now you're starting to see like energy and fuel prices start to creep back up again, which again I know impacts carriers, but it impacts consumers directly, right? Because a lot of consumers, if for example, like there was I think almost an 11% jump in gasoline prices over the last month, according to like the Consumer Price Index. But the idea is saying that again, if that money or that income is going into, your gas tank, it's not going into purchasing something, at a store. And again, you think about fuel costs for us as consumers. Yes, it's important, but again, I know fuel cost for a carrier can be a massive cost. So, it's not just, those types of things of operational costs, but like you've got to look at fuel and these other things too, right?
Yeah, totally. And I think that, it's going to be an interesting time here in the US because, we have this thing called an election that's about a year away. And there's already a lot of talk about the economy and like who's going to fix the economy because I think many regard it, or at least politicians talk about how, it's a tough environment. Interest rates are high. People's 401ks aren't doing as well as they might have in the prior year. And so this is an election battle. And I know that President Biden has talked about his plans. I know all of the people on the other side of the aisle have all these um, different ideas and all these things. But, when you talk about consumers, the economy is top of mind. And does that mean that there might be a more aggressive approach to try and improve the economy and relieve some of this pain? I don't know. I mean, it seems like the Fed is definitely concerned about the current inflation. And inflation is like one of the most detrimental things you can have in an economy because it's just creating waste, right? Your dollar is not going as far as it would have in the same period prior. So I think it's a tough environment. And I think when you look to the future, if I'm an ocean carrier, I'm going to say, well, I have no reason to think things are going to improve. I'm going to continue to control my capacity. And even though I'm taking on deployments of ships, I'm going to either look at scrapping more ships than I planned, or I'm going to say this loop has 8 ships. Now it's going to be 9 ships. I'm going to go slower. That helps my environmental scorecard anyway, if I'm steaming slower than if I was faster. So there's not really a negative effect there, but I'm very sensitive to deploying additional capacity because just like I said, if the rates are going down, my costs have gone up. This is not something that the shareholders are going to be too happy, or whoever owns me, whether it's a privately owned company, a government, whatever. You're all impacted the same way. Is that you just don't have money to burn. You want to turn some type of profit, not the same profit as a year or two ago, but something that's more sustainable, and you want to have a positive EBIT.
Yeah, well, we'll know in a couple of days, right? I mean, I think the Fed meets again on September 20th, another, 2-day meeting. I think a lot of kind of the forecasters would think that they're going to hold rates in place. We'll see. But again, already at 22-year highs. But I think when you see some of the comments from some of the carrier executives as they release earnings, right? I mean, I certainly think there's this recognition of a couple of really outstanding years, like just banner years. But there's also this idea of saying, look, I mean, without a doubt, there's some rough seas ahead. For how long we don't know. We still see some growth, but it's certainly not going to be what it was. And Don, you and I've talked about this before many times on this podcast. Is the ways the carriers can try to find some equilibrium is again by managing this capacity, and it just seems like over the last 2 to 3 years, they've gotten much better at how they manage that capacity. But I do have to tell you, it does create challenges for shippers when it comes to blanking sailings and omitting ports and things of that nature. But I mean, is your perspective based on everything we just talked about that like we're going to be in this kind of mode and carriers are going to be managing capacity for the foreseeable future?
Yeah, I think this is going to continue. I think carriers are going to continue to control capacity. And I think there's another element that people shouldn't lose sight of, and that is some of these alliance reshuffles, because we know that the 2M isn't going to stay together. And it looks like MSC is going to mostly go at it on their own. I mean, they've started getting this relationship with Zim. But, where does that leave Maersk? And Maersk, as the second largest carrier in the world, I think they have somewhere to go. But I think that's going to have a big effect on like the type of services that you see, and that'll probably happen sometime in the next spring. But while all that's happening, I think carriers are going to continue to be aggressive on controlling capacity, just because there isn't the kind of demand that they've been used to. And it's been tough. I mean, they deployed everything that they could because the demand was there. But you know it like I do that ocean carriers can't move that fast. You have all these ships on the water. You can't just pull them off or park them or scrap them. It takes time for you to get your network to where it needs to be, where you're optimizing and achieving a positive result. And I know all the shippers are just like groaning, like, oh, these poor ocean carriers, they made a lot of money. And I think from the carrier side, it'd probably be interesting to hear some of the impacts, like what goes on for these shippers. What are the types of things that they're dealing with as a result? Because the carriers, they're not trying to disrupt the supply chain; they're trying to make money. But from a shipper perspective, I think there's different impacts from these things happening.
Yeah, I mean, here's the thing, right? If something can be communicated in advance and planned, okay, fine. Maybe you don't like it, but you can at least start to deploy some type of strategy to kind of work around it or work through it, right? I mean, like for example, we've got Golden Week coming up in China, where it's a national holiday. A lot of production slows or stops. It's a planned event. Carriers usually have blank sailings anyway, but because of the kind of the protracted scenario, I think I saw an announcement where there's going to be like 47 blank sailings, right, across the Transpac in Asia, Europe. Okay, fine, that's going to happen, but at least a shipper knows about it ahead of time and can maybe do something. I think the more challenging thing from a shipper perspective is when there isn't a ton of advance notice, right? Bookings are already in place. They've been in place for, 2 to 3 weeks. And then you find out that either a ship is going to omit a port that you have a booking at, or the service just isn't going to sail that week. And I think that's where some of the rework and some of the challenges really start to set in. I mean, is there a perspective from a carrier, side as to, what can be planned and unplanned, or how carriers think about that?
Yeah, I think it's going to depend on the carrier, frankly. I mean, I think carriers are going to say, on a high level, like, okay, I'm 50% utilized. I can see that the next 2 weeks are maybe 60, 70% utilized. I can consume that capacity. But that looks a lot different if I'm a carrier that has 80,000 TEUs a week in a trade versus a carrier who has 20,000 TEUs a week in a trade. And so if you have a much smaller capacity, that might be a little bit more punitive because you just may not have as many options. That other carrier with more capacity, they certainly have more options than somebody with less capacity. I think that just makes sense. Now, that's not me suggesting that shippers should only go with carriers with all kinds of capacity, because I think the other side of that coin is, are they going to be more conditioned to blank? Are they going to want to blank more because they're more heavily exposed because they have more capacity? I don't know the answer to these questions, but I think from a carrier standpoint, it just comes down to utilizations. And as I mentioned before, their costs are really high. And it may be a lot cheaper just to blank a sailing because I'm not taking on any of that cost of operating versus operating ships at less than 50% capacity, taking a loss. Because again, on a high level, I'm under all this pressure. I have this hangover of making billions of dollars a quarter, and people are going to feel differently about that. But the reality is, carriers are now getting into a cost mode. I mean, the people I talk to say costs are extremely important. We're watching our costs, and we're going to aggressively plan our network because we want to achieve the best possible result. And a byproduct of that is that rates stay high, go higher, or they stay where they are. But it has to be a sustainable rate level, because today there's some rate levels that frankly aren't sustainable.
Yeah. Well, I mean, let me give you the shipper perspective. That was a really good kind of breakdown on from a carrier perspective, what they're thinking about, how it impacts, right? I mean, as a shipper, I mean, typical shippers just they want to ship their products on time. Like they want to have good in stocks and stores for customers. They want to honor their commitments to carriers, optimize their supply chain, whatever their procurement, solution was, they want to make sure that that gets, adhered to, invest in their teams and look at future strategy. Like that's kind of, the body of work that, you look at as a BCO, right? The problem is, you're dealing in an industry where reliability's kind of always been a challenge, right? I mean, if you think about like the best we've ever had, what, 80%, maybe 90% in a particular trade, that dropped down to like 20 to 30%, like during the pandemic, which again, everybody understands, what happened and why. But now we're back to like 50%, right? Reliability. And again, when you talk broadly, kind of across, all trades, what that means from a shipper perspective, it means like 50% of the time, the plan that I have laid out to all of the teams that help me execute it, both internally and externally, 50% of the time, it's actually going to happen the way it's supposed to. And 50% of the time, it doesn't. And so I'm in a world where I'm dealing with 50% exceptions because my plan is not able to be executed or followed. And that's just a really difficult world to live in, especially when you think about these exceptions being, very manual in nature, right? There aren't a lot, a lot of this stuff happens in like spreadsheets, emails, phone calls, texts. I mean, it's really hard to kind of, manage and report and see exactly what's happening and why as a result of a lot of these changes that are happening. And so it makes it really difficult to focus on kind of the value added work as a shipper, kind of like working on future strategy or like leadership development for my team or whatever, because I'm always dealing with these exceptions. And then I'm trying to communicate to the rest of my organization, like the impact of these changes. And will it impact, our merchandise in the store? Will it impact our drayage operations or our DCs or what have you? So there's just a lot that comes from these changes, even though I think shippers understand why carriers are doing it. Man, it creates a lot of manual work for shippers.
Yeah, and I mean, it sounds like with all of that, because from a carrier side, you don't really see that. I think it's a question of like, how do you manage that? Like, what kind of information you're getting? Because I feel like our industry is still very manual, still a lot of dependency on email, spreadsheets, um, certain types of reports, and depending on the carrier, these reports look different. So I can imagine from a shipper standpoint that you have all these different things coming at you, but how do you unpack it in the same way and use it that you can actually create actionable data? It sounds like that's not a fun process.
No, it's not a fun process, and it's very challenging, right? Because there aren't a ton of technology solutions, at least with the shippers I'm talking to, that are available, right? And it sounds crazy, but what shippers are telling me is, folks that are trying to perform these functions, a lot of this works around kind of origin teams or supply chain management companies that are dealing with, you know, uploading purchase orders, dealing with forecasts to carriers, managing kind of allocations across contracts, and then that whole booking process. Like those teams are, believe it or not, they're telling me are just as stressed now as they were during the pandemic because in the pandemic, you may have had 50% of your bookings getting rejected because there just wasn't enough capacity. Now you're getting 50% of your bookings rejected because there isn't, a ship available, right? Or they're going to omit a port or what have you. And it's one of these things where now I've got to figure out like what is the best way to your point. Like I'm getting all these questions asked of me from like a destination management team or a corporate office like why aren't you following the allocation, why is the forecast not what it should be, why are these things coming in late and how late are they going to be? And again, it's hard to communicate those things in emails and spreadsheets, and then to later, say you, in a quarterly business review you want to look at a scorecard and you want to say, hey, look, I know that wasn't a good quarter. I want to go back in and figure out the root cause. Like, was the root cause of these exceptions? Like, why weren't bookings being accepted? Why did it not sail when it was supposed to? And sometimes what you find, yeah, I mean, sure, a ship didn't sail, or a port got omitted, but sometimes you see inside of the shipper, right? This is where it kind of goes both ways. If you have the data, you can see, well, hey, look, my factory didn't produce the goods, right? Or I uploaded the PO too late. The supplier didn't have the chance to get the goods manufactured in time for the ship. So there's a whole lot of reasons why things don't happen the way they should. But I'm telling you what, the idea of starting to move to standard exception codes, more efficient ways of managing kind of these exceptions in this data to be able to communicate it to the people you need is critically needed.
Yeah, I can understand that, and I think about when you were talking that I have this situation with the Panama Canal that we know that there's a drought there, there's a restriction, there's ships that are backed up. This is a reduction in capacity. Now, this isn't something the carriers planned per se, but it's affecting lead times and it may cause sourcing decisions at a shipper. And then you have scenarios where, maybe you're going from Shanghai to LA and you can see that, 30% of the available capacity is being blanked. And I think just having an idea of You know how like when you go to the airline, you know, pick your seats, you like buy a ticket and you can pick your seats and you kind of see like how much is available. You look at a plane and you say, okay, I can see there's like 10 spots or 5 spots or whatever. Um, there's really nothing like that in the shipping industry, right? There isn't a place to go to say like, well, where are my other spots? Is it on the same carrier? Is it across carriers? And I think for a shipper, I mean, I don't really know how you do that, but it sounds like it's difficult because, you know, the carriers certainly know like, oh, there's a feeling like there's enough capacity available for everybody. But if you're a shipper, if you're trying to plan, yeah, maybe there's a ship available, but it's not for a week or 2 weeks, or maybe you have to reroute it now because of some other unplanned thing. And the more we have these kind of unplanned events like the Panama Canal, the more difficult it must be for the shippers.
Yeah, and again, we've recognized now, right, as supply chain professionals that again, there's always going to be the next Panama Canal or the next labor disruption or the next weather event or who knows what. So the idea of being prepared for those events to the best of your ability, I think is critical, right? And I think this is part of the where you have to take a kind of a deep reflection that says, hey, we went through the pandemic and we dealt with these challenges and problems. And now here we are 3 years later, dealing with similar things around exception management and around communication management and around root cause analysis and scorecarding, the performance and operations. And like, this is the cool part of kind of, me now being back in an advisor role with NISHIX is working with shippers on piloting what are some of the technologies or what are some of the solutions to help manage this, right? And it's exciting to kind of be working on these kinds of things because the savings can be significant, right? So if we say 50% of shippers' time, in some cases they're saying 60% are wrapped up in manage these exceptions, right? If you can start to eliminate, those types of exceptions, and even if you can't eliminate them, if you can start to become much more efficient on how you manage them and categorize them and communicate them and make decisions on them, man, that starts to free up a ton of time because the reality is whether it's a shipper's resources or sometimes a supply chain manager's resources, far too often the solution I hear is we're just going to throw people at it. And the idea of throwing people at it makes it even more manual and adds way more cost and more complexity because now you have more people trying to interpret what decisions are supposed to be made and trying to figure out how to communicate back the decision as to why they made the decision they did and whether it was right or wrong is hard to figure out later. So the cool thing is I think people are starting to work on these types of things, and I'm excited to see kind of where some of the pilot work we're doing with some of our shippers actually goes.
Yeah, I was thinking when you were talking about just more people, I mean, you can throw people at it, but then you're just more error prone because when you don't have a very robust tool, you're dealing with spreadsheets, and spreadsheets can have errors, or I'm dealing with one version, you're dealing with a different version. So that makes it more difficult. And I think, you know, I wonder what your take on this is, because I think in the technology space, there's been so much emphasis on individual container tracking. You know, where's my stuff? And I think the industry has made some progress there on getting better information on where my containers are. But it sounds like, based on what you described, that's only a fraction of the story. Because, sure, now I know my container's on the middle of the Pacific Ocean, or it's stuck in a terminal somewhere. But what do I do next? Like, where's my available capacity? Like, how do I manage these things? Like, how did I end up in this situation? Like, it's great to know all my containers are in this one place, but now what do you do, and what are the actions that you take? But what's your reaction to that statement?
I think it's funny because the question that I asked some of our pilot shippers is well, hey, look, if you're telling me the pain is just as great or greater on some of these teams as it was during the pandemic, why is there not like this outcry, from senior leadership of, hey, we've got to fix this and we've got to get, a process in place. We've got to get technology, whatever it was, remember? And it's because back during the pandemic, again, you had consumers and you had people craving the inventory, needing the inventory. They were missing sales because it wasn't coming in. Well, the same underlying things are happening, but because there's, enough inventory or sales aren't as robust as before and consumers aren't complaining about out of stocks, it's just not a focus. But the same underlying inefficiency that's creating additional resources, that's creating additional time, that's creating non-value added work is still there. So it's kind of fascinating to think that during the time in the pandemic, all people wanted to see was, where is my product in the pipeline, because it has to get here, or I need to be able to tell people when it gets here because they've either already purchased it or they want to purchase it. And so to your point, like that was the problem, the main problem that people were trying to solve at that point was, tell me where my stuff is, because people have to know and they need to plan on when it's going to get here. Now it's less of an issue about that, and it's more of, hey, I'm adding way too much cost because I'm adding way too many people, and I don't like the results of the decisions that the people are making. I can't look at what the real problem root cause of the problem was, because there aren't real exception codes that are standardized, and I can't have these meaningful discussions with my service provider partners because the data is just not good enough about how we fix it going forward. So that's where I think things are a little bit different, where people now have moved from, okay, I've either invested or solved, the visibility problem. Now I've got to work on forecasting and allocation and planning better with my carrier partners, managing exceptions and managing communications more efficiently within my organization, because that's where I see true savings.
Yeah, and I think from a carrier perspective, they're very interested in shippers that can do that, because if you can demonstrate you have a better handle on your inventory and your planning, then you fall into that shipper of choice category, that you're somebody I'd rather partner with as a carrier because you have a lower cost to serve. And that's going to benefit me from a carrier perspective because you actually have a better handle versus a dependency on me to provide you all this data. Now, it sounds like what you described is that there's a lot of cost pressure on the shippers, that this has maybe shifted a little bit because now you have to put in all these resources because you have this inefficiency. I mean, we think about like shipping costs and, the price of a container, and that's one thing, and that's certainly come down. But it sounds like the problem is still shifted to a shipper, that they still have these inefficiencies they have to deal with. And it sounds like there's an opportunity there with some efficiency gain if you can demonstrate like how I can do this better, because right now I'm having to throw a bunch of resources on it. You could debate how effective it's been or not, but they're throwing resources at the problem and still struggling to solve it.
Oh, without a doubt. And again, during the pandemic, they were getting answers or getting directives from senior leadership like, hey, whatever you need, you can have it. Just fix the problem. Oh, you need more people? Okay, we'll get you more people. Whatever it was, because again, sales were far exceeding plan, and the investment, right, to get the product here to sell it was more important. I I promise you, there aren't many shippers or BCOs in a position now where they're being told, "Hey, whatever you need, spend it, whatever you have to spend. Add the number of people you need to add to just get it done," is happening, right? It's the exact opposite. Sales have slowed, underlying costs have gone up. How do I become more efficient? It's really not, how do I add people or add cost? How do I take it out? Like, how do I become more efficient? And so that's why this is where the power of technology can do something like that. And back to your other point around forecasting, like we should do a whole nother, podcast about forecasting, because there's a premise that I think, if again, if shippers had the ability to forecast with a higher degree of accuracy and predictability of the carriers, I honestly think that carriers would have more confidence. They may not have to blank as many sailings. They may not have to admit as many ports or manage capacity the way they are, if they had better information to plan with. Again, whole nother podcast, but I would put that out there that says, like, forecasting is a critical component of helping make all of this, better.
I couldn't agree more. I think the problem is that if the problem isn't getting a forecast, okay, I've lived my life where I've ingested enough forecasts, rolling forecasts, whatever they are, from different people. But those problems around actually measuring the forecast and looking at forecast accuracy, like you have companies, carriers and shippers that are living in two different worlds as far as like how they allocate ships to weeks and things like that. And it just all sort of unravels. If you can't agree on a number, how are you going to agree on a forecast? Because when I'm giving you a number, you don't really understand what that means. And but to your point, I think there's a huge opportunity there because if I'm a carrier, you know that carriers, I mean, you've been on the shipper side, you know, carriers are asking you, Brian, what's your forecast? I need to know what you're doing. And you give them this forecast. And I can tell you from a carrier side, it was very difficult to ingest that and use that in a way that was helpful. It's just like, does the big number go down? Well, okay, yes, I see the big numbers going down. Well, we all know it's going down. But is it staying the same from Yantian to Vancouver, but going down from Shanghai to LA? That part you don't know. And you can't deploy your assets when you don't know those things.
Hey, look, again, I think this is a good teaser for a future podcast. I think that we could absolutely spend another 20 to 30 minutes breaking down forecasts and planning and allocation. But without a doubt, it's a critical component that I think again we could bring some light to. But either way, I think at the end of the day, kind of the summary of this is from your perspective, this is kind of an environment that you think we're going to be in for the balance of the fourth quarter, maybe even into the first quarter. Like who knows beyond that, but unless demand comes back something significant, carriers continue to manage capacity, which then kind of leads me into this idea of saying from a shipper perspective and a BCO perspective, you got to find a way to kind of deal, with this variability in a more effective and efficient way as you go into 2024, because it feels like it's here to stay for a period of time. And then, as we said earlier, even when this period of time ends, there's going to be something else that you're going to need to be prepared for. And, again, if you can manage more efficiently, again, hopefully that helps you from a resource and a cost savings perspective in the future.
Yeah, totally agree. And I might need to take like, I don't know, some medicine to relax me to talk about forecasting because I feel like I get like all worked up, just some traumatic events in my prior life. But I think you're right. And that's a good summary because I think my statement would be from a carrier side, I think you're just going to see this aggressive control on capacity at least until next spring, because next spring is when the networks are going to change. What is that MSC Maersk change going to look like? Where does that capacity go? I think that's still unknown now. But until that gets settled, and people will know in advance, but it means that certain loops, certain service structures may change. And that means that, it's just hard to see how much capacity is going to be available there. But listen, Brian, it's great having you back. Really fun show. Great to catch up and talk about the industry. And to our listeners, don't forget, give us feedback, rate us, review us wherever you find our podcast, Apple, Spotify, or wherever you download our show. So thanks for listening, everybody.
Thanks for listening to the Supply Chain Secrets Podcast. Make sure to subscribe to the podcast on your favorite podcast network.